Okay, recording this video, it's Monday, 10th of November 2014. Hope your trading is going well. So apologies, there's been nothing on the Emini-Watch website for the last couple of weeks, just been busy on other projects. And I've been recording this video kind of multiple starts. I've lost my habit of recording videos, so this is becoming a little bit difficult for me. Anyway, I want to talk about a question I get by email regularly, which is this: I can't trade the US time zone, what should I trade? This will come from people who are either in the US time zone and have regular day jobs, and just that first couple of hours of E-mini trading is just not convenient for them, or they're outside of the US time zone and for whatever reason that first couple of hours of E-mini kind of good trading is too difficult for them to trade. I must admit, I'm in the fortunate position where whatever the open is, I just trade it. So for example, here I'm recording this in France, and the open of the US market is 3:30 in the afternoon here. That's quite a nice kind of time to start trading. In Sydney, when I'm trading from Australia, it is damned hard because the start is 11:30 p.m. at night, and then you're understandably kind of it just feels very different. It feels like you're kind of trading a little bit kind of in the clouds. And then when we're in Hawaii, the start of the day is 4:30 in the morning, so kind of before dawn, and that's a different experience too. But I think the E-mini is such an important market for me. Rather than switching to another one, I just adjust my lifestyle in order to kind of trade the market. But that's not for everybody, and this is what this video is all about. And I'm going to start this little video with an anecdote, a little story from back in the day with Larry Williams and my beloved pager. 2001, May 2001, Larry Williams came to Sydney, and I decided to really commit to my trading around then, and threw down the $6,000 that was required in order to join a pretty small group. It's about 20 traders probably with Larry Williams, where you traded kind of 3 days with him live trading of the US markets. And for me, that was an incredibly exhilarating time. Larry Williams is an interesting guy. I have read almost everything he's written, and I've seen him multiple times, not only at the $1 Million Challenge, but also every time he came to Sydney I'd go and hear him speak. He's a fabulous speaker. He's contributed greatly to the community. The things that he's written in his books are fantastic. I like him a great deal, but there is a section of the trading community that can be quite negative, and they pick on various people. Unfortunately, Larry Williams is one of those people that kind of gets picked on. There's good and bad in everybody, but I've got to say I've got nothing but good things to say about Larry Williams. He's been incredibly helpful to me in my learning and understanding the markets. But anyway, this little incident happened on the Sunday evening. We came in on the Sunday evening, and he presented for 4 or 5 hours on his methods and what he was going to do when it came to the open on the Monday, and then we traded for the Monday and the Tuesday kind of with him. And about 2 or 3 hours into the presentation, a little gentleman at front of the room, a Sydney side, Australian obviously, said to Larry, he's noticed that the Australian market can sometimes lead the US market, that if the Australian market was up that day, that when the US market opened later on in the day, that it would actually follow the Australian market up. Well, there was a little bit of a silence, and Larry said to this gentleman, "So do you mean to say that you think the Americans care what happened in the Australian stock market?" And I must admit, it kind of took all of us by a little bit of surprise when he said that. That was not verbatim, that was like, effectively that's what he said. And he then proceeded to tell this gentleman that the Americans didn't give a jot about what happened in the Australian market kind of the night before, that they were just doing their own thing and they made their own decisions. At the time, and this is where the pager comes in, I had this little Motorola pager that I absolutely adored. This one's showing sports scores on this little kind of image here, but the one I had, you could plot what the stock market was doing, and you could bring up various stock symbols and actually plot them on this little Motorola pager, and I absolutely adored this thing. And at the time I was trading opening range breakouts on the Australian market based on a system that I bought from a US trader, and it had fantastic stats in the US market, but for the life of me I just couldn't get this thing to work profitably on the Australian market. And this is what was happening. This is just a timeline of what was happening with the US Open and the Australian Open. So the US market would open, we'd have some kind of move for the first couple of hours. It kind of slow down, obviously, for the latter part of the day, and it would end up being an up day in the US market, and then the US market would close and just be doing nothing kind of overnight. The Australian market, kind of back then, we weren't trading 24 hours, we were just trading the day session on a thing called the SPY, which is the futures market on the Australian stock market. It now trades closer to 24 hours a day, but at the time it didn't. And all that would do would be, it would not be trading during the overnight session, but all the traders could see what had happened in the US market. So when the Australian market opened after the US market, effectively the next day, it would just gap up. The futures market would just gap up instantaneously to the level that it thought that would be a proxy for what was happening in the US market. So the Australian market was being totally led by the US market, and because of this gap activity, because you didn't know what the US market was going to do overnight, it was impossible to trade. I couldn't get into a position the day before the US market. I was trading the opening range breakout, and it just happened to spike up first thing in the morning with no opportunity to buy in at the open, because the open was effectively up here. Now what happens is the market kind of trades 24 hours, and so what actually happens is during the overnight session of the Australian market, we're following up exactly what's happening in the US market. So the US market is dictating what happens around the world for all these different markets. And I'm just using here the Australian market as a proxy, as an example of a smaller market that's driven by the US market. You could talk about any of the overseas stock indices. They would be kind of similar to this. Even the big ones, the FTSE, the DAX in Europe, the CAC 40, which is the French market, and then the Japanese markets, the Chinese markets, and so on, and all the smaller stock markets around the world. They're all following the US market to a great extent. So for me, that was an interesting kind of time, getting the lowdown on what Larry was thinking was happening around the world. And the US traders didn't give a jot about what happened in the rest of the world. They were going to determine what was happening in their market. And effectively what happened around the world is they kind of followed the US market to a great extent. And in fact, I think that kind of correlation between the different markets has become tighter and tighter over the years, and really since the crisis in 07-08, in my mind, we've come down to three incredibly tightly correlated markets being led by US markets, and they're these. It's the US equities market, the US dollar, which is against all of those other currencies, because all the other currencies tend to move in parallel. So we've got the euro, the yen, British pound, Australian dollar, Kiwi, all of those currencies kind of moving in parallel against the US dollar. And then we've got effectively US denominated commodities across the whole commodities kind of spectrum, all the way from copper to gold, silver, whatever. And then lastly, we used to have a bond market, but we have so much central bank intervention in the bond markets that those bond markets are pretty much, well, not quite, but they've disappeared. Certainly in Japan, the bond market just doesn't exist anymore, hardly trades anymore. So the bond market is just a plaything of the central bank, and is not really a market anymore. So since 08, I think that all of those correlations have come really close together with all those overseas markets, and they're following three kind of major markets in the US. The US equities market, which the futures, the best kind of representation of the futures market there is the Emini futures, and then we've got the US dollar index against all of those other currencies, and all those other currencies are moving in tandem against the US dollar, and then the commodities complex kind of moving in tandem. Now obviously there are little sub components of these markets. So within the US equities there might be the Nasdaq subcomponent. Within the US dollar we're talking about the euro versus the pound and so on. With commodities it might be copper versus silver, all of those things. what I'm saying is they're closely correlated. The relative movements might be very different between those different markets because they have different betas compared to those kind of raw drivers. But what we're sitting at is a situation where there are effectively three major drivers in the world markets, and that's what you want to be trading. Because if you're trading like I was back in the day, a small related little market, it was just being driven by this much larger US market, and this was the tail that was being wagged by the dog, and that was what's going on. So you need to be trading kind of the most liquid markets, the largest markets, the ones with the highest kind of volatility. And I talk about the three itties: liquidity, volatility, and electricity. So liquidity being a market that is deep, that has a lot of players in it, that has a lot of volume being traded. That's what you need in order to be able to get in and out easily of your positions. The second thing that you need is volatility. You need a market that actually moves around quite a lot during the day. If you're stuck on a market that just has very small micro movements during the day, and to some extent the bond market, it has big kind of long-term trends, but day to day the bond market can be a little bit tight in terms of the amount of movement that you actually have. So you have to pick a market that has decent ranges and trading moves during the day, and that kind of comes down to the equities markets, the forex markets, and some of the commodities markets can be on and off. We can have days and weeks when a particular commodity, soybeans or cocoa or whatever it might be, just doesn't move a lot, and then you have an announcement of whatever, a frost, a weather event, some kind of external force happens, and then you have massive movements in that market. You want something that's kind of a little bit Goldilocks. It's kind of something that's a decent move most days, and that's kind of the forex markets and the equities markets. And lastly, when I say electricity, what I mean is you want a market that is traded on an electronic exchange. You don't want anything that's pit traded, nothing that can be kind of fooled or gamed by people having a hand in what you're doing. And again, going back to my example of trading the SPY back in the day, in 2001, you phoned in your orders to your broker, and who knows, when he put that order through, I used to find, particularly when I was trading options, that the bid-ask spread all of a sudden widened out incredibly as soon as I kind of wanted to take a position or whatever. You're looking for something that is liquid and is traded on an electronic exchange in order to get kind of the best type markets. So you're looking for those three kind of characteristics in your markets. So let's talk about time zones and different markets at different times of the day. What I've got up here is a 24-hour clock based on GMT, and beside that Chicago time. So you can have a look at this. So GMT, Greenwich Mean Time, this would be kind of European or London time up here, and then we've got Chicago time there. So for example, the 8:30 a.m. open in Chicago is 1:30 p.m. GMT, Greenwich Mean Time, so 1:30 in the afternoon versus 8:30 in the morning for Chicago time. So that's the two numbers that you've got up at the top of this chart here. And then down below, what I've put in is three kind of major sessions. The North American or American kind of session going on here, which is effectively opening from, the futures markets would be open pre-open, and we get news events that are happening about 7:30 in the morning Chicago time, going on till 3:30 in the afternoon Chicago time for the American session. So that's the first kind of primary session to kind of worry about there. Then as we roll around the 24-hour clock, we've got the Asian markets opening here. All of those, Singapore, Hong Kong, Tokyo, Beijing, and so on, and those have that's quite a long trading session happening there. And then there's a little bit of overlap between the Asian sessions closing and the European sessions opening. So that would be in Germany, in France, in the UK opening here, and then quite a large amount of overlap between the American session and the European session. And during this 24-hour period, this is the most active period of the day. So again, the dog that is wagging the tail is the US market. What happens in the US is incredibly important. and it's the open of the US around that time, just pre-open and at the open, that's the most important in terms of news releases and so on. What happens in the latter part of the day of the American session is the volatility kind of reduces, and we've decided whether it's an up day or a down day. And if it's going to be a reversal day, it's going to happen before 11 o'clock in the morning Chicago time. So that is the kind of the plum time during trading. And you can see it's also, the latter part of the European session. That's why the liquidity is greatest during this time period. We have the most number of news announcements that come out at that time. The dog that is wagging its tail is the American market here, and the European session is also kind of taking advantage of the lead that happens in the US market. So this is the most important kind of active session here. Now, just as I'm talking about kind of GMT and Chicago time, just to make a note, because I often get this question and people will email me saying at this particular time this is what happened in the E-mini, and what I'll notice is the timestamp that they're using is not the Chicago timestamp, it's the New York timestamp. And just a convention that is used wherever the exchange is located for that particular instrument that's being traded, that is the timestamp that you should use to nominate various kind of movements that are happening during the day. The stock market, obviously the US stock market, is based in New York, and when you're talking about stock market times, the timestamp that you use is the New York timestamp. However, the futures markets are traded in Chicago. Chicago to New York is a 1 hour time difference, and you should be using the timestamps for Chicago. That's just the convention, take it or leave it, but just bear that in mind. When I'm talking about E-mini timestamps, I'm talking about Chicago times. So 11 a.m. Chicago time would be 12 p.m. New York time for a potential kind of reversal day as an example. But just to kind of bear that in mind when we're talking about timestamps in different markets. So what to trade in those different times of day? Equities market in the US, I would say the futures market, the E-mini market, is the absolute kind of go-to market there, much preferred kind of trading vehicle during that whole kind of time session there. So that's an easy one to kind of decide. So while the US market is open, and for the hour prior to the open of the US market, because that's when we get some data releases at 7:30 a.m. Chicago time or 8:30 a.m. New York time, those data releases are really important to kind of drive what's happening in the stock market. And before the New York stock market opens, or around that time, we've got the futures market open in Chicago to be able to trade those news announcements. So from that period on, the E-mini is kind of the plum vehicle over there. Prior to that, what are the best vehicles during the European session? Well, the two would be the equities market and the forex market, and that would be the euro for the foreign exchange, and then the DAX index, which is the German index. DAX stands for the Deutsche Aktien Index, which is the German stock index, and that is based, I think it's 30 or 60 stocks. It's quite narrow in terms of the number of stocks that it kind of tracks, but they're European stocks that might be traded out of the German stock market, and the DAX is the futures index that's based on the equities market in Europe. So that would be the best one in the European session. And then if we go earlier on in the day, when we're talking about the Asian session, what would be the two kind of major markets there? Well, again, the forex and the equities markets would be the yen and the Nikkei kind of stock index futures there. Nikkei, obviously a huge market, the Japanese market's incredibly important, and then the yen as a really important forex market. And the yen tends to trade a little bit differently from the basket of currencies that is kind of Eurocentric, either Euro, the Swiss franc, the British pound, and so on. Those tend to move kind of closely together. The yen would trade a little bit differently, generally in tune against the US dollar, as all of those currencies do, but it has some different kind of characteristics, and so it doesn't just follow those other kind of forex markets. So that would be my suggestion during the Asian session. So let's take a couple of examples. If you live in the Asian time zone, so if you're Singapore, Hong Kong based, Australian based, New Zealand based, what are your opportunities to trade? If you can trade during the open of the Asian session, obviously you would trade the yen or the Nikkei index futures index. But if you can only trade before, if you have a regular day job during the Asian time zone and you live in the Asian time zone, can you trade before the Asian markets open, or after the Asian markets opened? Well, in my opinion, before the Asian markets open, what you're talking about is this time frame here. which is the end of the American session and the end of the E-mini trading. And I would say the latter half of E-mini trading, the latter half of the day of E-mini trading, is very difficult to trade just because the ranges aren't there, because all of the activity has happened in the early session, the first couple of hours of trading of the E-mini. You rarely get kind of decent moves. Obviously there are exceptions with FOMC days or days that are incredibly volatile or whatever, but for the most part that's really tough trading. And anything that's after those markets have closed for the day session, there's just nothing going on there. There's no liquidity, no volatility. Anything there is just going to be really tough trading. So if you live in the Asian time zone and you want to trade before you go to your day job, I would say there's nothing available for you. But after you come back from your day job, if you're trading around these hours, then what I would say is trade either Euro or the DAX. So if you're after work in Asia, that's what you should be trading. Then let's consider if you live in the European time zones. What can you trade before you go to kind of your day job and you want to get up very, very early in the morning and trade? What should you trade? Well, during that time session, I'd suggest the yen or the Nikkei. So this is before work in Europe. And then if you've come home after working your day job in Europe, again, you're stuck in this really tough time zone where it's the latter half of the American session. The E-mini is open, but the volatility and the ranges just really aren't there. So I would suggest you wouldn't trade after the European session has opened. I think that is a really tough time to trade. So if you're working in Europe, the option is before work to trade the Asian session with the yen or the Nikkei. And then lastly, if you are an American living or Canadian living in the North American kind of time zone and you can't trade during the day session here, I would suggest before the open, if you get up early in your day, before the open, trading the European markets with the Euro and the DAX. So before work in America, that's what you would trade there. And then if you come home late in your day, I would wait until the Asian markets open, kind of late in the evening, if you're an American or North American kind of having a regular day job here. So I would say after work in America, you can be trading the yen or the Nikkei. So that's a little example of the different sessions, when the most activity is, what kind of vehicles you can trade other than the E-mini, and a couple of examples of if you're kind of stuck with a day job and in different time zones and can't trade the American session. That is what I would suggest you do. And then lastly, just as a summary, so primary market I think is the E-mini. I think it's a great market. It's got all of those things. It's got liquidity, volatility, electricity. It's a great market for trading. If you can't trade the E-mini, then the next choices down would be things like the Euro, the DAX, the yen and the Nikkei. Two of these are forex markets and two of these are stock market indices markets. Just a reminder, the better indicators work on all of those markets. As long as you've got volume data for each of those contracts, then you can trade those, which is with the Euro and the yen. You should be looking at the CME contracts, the Chicago Mercantile Exchange contracts, rather than the cash forex. Look at the futures forex contracts traded on the CME in order to get the full volume picture for those forex markets. And then lastly to say, that's just my personal opinion. What do you trade? There are obviously around the world some other markets that are very important. You've got the Kospi in Korea, you've got the Sensex in India, and both of these have been good trading vehicles over the last 5 or 6 years. They're really kind of grown up in terms of maturity and volumes and number of traders trading those markets. And then in the last couple of years, crude oil has been a very good market for trading, and I get a lot of inquiries from people who want to day trade crude oil and do the better indicators work on crude oil, which they do, kind of asking those questions. So send me an email if you trade something else. If you do, I'd be very interested if you trade the Kospi or the Sensex. Tell me what you think about those markets for kind of day trading and whether the ranges and volumes are really there to be able to make good money day trading on those markets. So if you want to give me some feedbacks on some other markets around the world, I'd love to hear from you, and I'll add this to the bottom of this article, and we'll make this a little bit of a feature article to help those traders who can't trade the E-mini during the day session. So there we go. I hope that was helpful to you. Just some thoughts on what markets to trade if you can't manage the US day session to trade the E-mini.